Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview presentations. And it's my honor and pleasure today to welcome Christian Kargl-Simard, the CEO of Adventus Mining. Good morning, Christian, to Canada. How are you?
I'm doing well, Jochen. Nice to see you.
Nice to see you. Thanks for taking the time, because it's really important that we talk today. You guys brought out, to my understanding, a fantastic feasibility study for your Curipamba project in Ecuador. And it looks to me like this will be a real mine. So you have also your presentation brought with you, and I would suggest the floor is yours.
Thank you, Jochen. So just as you say, the headline of this front page of the presentation, which by the way is on our website as well, is Curipamba, building the next major mine in Ecuador. So we are following the footsteps of Lundin Gold and Fruta del Norte and the fantastic success there. The forward-looking statements, I'll let you read at your leisure, and now right into it. So our feasibility study showed a 15-year mine life. 10 years are based on feasibility study and reserves. So that open pit feasibility study, NPV8 after tax, $259 million US using long-term consensus pricing. We just updated our underground, so that's the last 5 years of mine plan, as a PEA. So we have to show it separately from the open pit. That NPV8 is $49 million US, and it's important that that is discounted to the start of construction of the open pit, even though the first year production there in the underground is in year 10. So there will be optimization on that underground to move it earlier in the mine plan at a later date, and you will be able to see that NPV tripling or quadrupling as a result in due course. Our base case IRR for just the open pit using long-term pricing is 32% after tax, at spot 44%. This is a copper project. Of all the copper projects in the world in development with a feasibility study and reserves, this has the highest rate of return of all those projects. So a standout project globally in the copper space. The NPV8 to Capex ratio is greater than 1. And the standout in this project, driven by the high grades, are the costs. So we're looking at 23,000 tons per annum copper equivalent production per annum. And then our all-in sustaining cost is $1.26 per pound. So to make it easy, let's put it into gold terms. So you're looking at 92,000 ounces of gold equivalent a year at an all-in sustaining cost of $308 an ounce gold equivalent produced. I don't know of another gold producer with such low costs, maybe Kirkland Lake Gold at one point. The closest comparable I can think of with that kind of similar production and low cost would be West Dome in Canada, which has about a 1.5 billion Canadian market cap. So the very strong margins here, and a unique asset in the mining space due to the margins. The 15-year mine life is shown by the open pit and underground. On top of that, we have 25 volcanic massive sulfide and porphyry exploration targets ready for drilling.
What would be the Capex?
The Capex is $248 million US versus the NPV8, if you add open pit and underground together, of $308 million.
And how do you think you can finance that? Maybe there's a little bit fear in the market that you have to use a lot of equity, but I could imagine with such excellent numbers that this is really makeable mostly with credit, right? I mean, non-dilutive.
Well, that's the main point. The PEA showed $185 million Capex in summer of 2019 when copper was $3 a pound. Now we got a feasibility study in 2021. Copper's $4.50 a pound, and you got a $248 million Capex with this kind of free cash flow and cumulative free cash flow over the life of mine. So, number one, is it a mine? Yes. Number two, is $248 million financeable by a company like us? Yes. Number three, how much equity dilution do we need to build it? And we put in the press release earlier this week that we are in advanced negotiations of arranging up to $240 million in non-equity financing versus the $248 million Capex. that is going to take some of the margins away from the project, but we have so much that we can finance this project almost all without equity and still be extremely robust, and very confident on being able to arrange that. And if the company is not sold, we will have that arranged in January of next year, first quarter next year.
If the company is not sold, you just said, so that might be also an upcoming option, because copper has already turned again to $4.50. I just did a copper analysis yesterday, and my new targets are, something around $6 to $6.50 within the next 2 years. So, I mean, it would be a monster bargain deal with the market cap today.
Well, I would be shocked if we didn't see those, Jochen. Obviously, I'm biased, but I really believe in that. And this project is just ridiculous at those prices. And keep in mind, there are very few copper development projects with a feasibility study, with reserves, with a line of sight for construction within a year. So this project has lots of M&A interest from the small and large companies. This is perceived as a small project, but I would ask your viewers, do you own Silvercrest Metals, or do you own Adriatic Metals, which are the two companies and projects which I think this is the most similar to? So those are 8 to 10 million ton reserves, very high grade, manageable Capex, just like Curipamba. Their market caps are 6 to 12 times what Adventus is today. And this is a copper project, whereas the other two are silver, zinc, or silver projects. So M&A, what we're looking for there is a select group of criteria and companies. So we're looking for groups that have construction teams, experience in Latin America, experience with VMSs, access to capital that is lower cost than us, and can pay a good price for this. There's not too many companies like that, but there's lots of high quality companies that are looking at us today. There is a window right now between now and, call it, the end of the first quarter of next year, even sooner, February, where we can look in parallel with execution advancing the project to M&A solutions. If we can pass on this project to an all-star team that has built lots of mines in the past, why wouldn't you do that? But at the same time, we've got a construction team ready to be hired and ready to go ahead with this, with that non-equity financing package. We are 4 years into Ecuador with this project. We've spent 48 million US on this project versus our triple NPV, which results in we paid just under 0.2 times to get to this point on this project, which I think is phenomenal price in the context of the copper price in the market. ESG, so we're going to be connected to the national grid. The grid is hydroelectric, a small footprint due to the high grades. We're about 250 kilometers by road to the deep water port, so low fossil fuels emissions to transport our product to the port. We're one of the largest foreign direct investment projects in the country under the new Lasso government, so high priority. We've just completed community consultations, a few rounds with our communities this year. That went well, ahead of our submittal of the environmental social impact assessment, which we plan to do by the middle of November. Cap structure is the same, 131 million shares out, about US 100 million market cap versus the 308 million NPV8. All the analysts have now come out with updated target prices on the back of this feasibility study. The range has not changed. It's the same as pre the completion of the feasibility study. Ranges between $1.60 a share Canadian, and that analyst looks at only Curipamba, not any of the exploration upside, to $2.50 a share Canadian on the upside. Shareholder register, same. Nobis bought 3 million shares in the market in August. This Nobis is our large Ecuadorian shareholder. And Altius has been buying in the market. They bought earlier this week. and I also bought in August as well. Novus, we've talked about, largest industrial conglomerate in Ecuador, really our political risk insurance, very strong supporters of us going through the permitting phase right now. You know the team, let you read at leisure. Now let's go into the highlights of the feasibility study. So, maiden reserves for the open pit, 6.5 million tons. 50% of that isn't proven. I've never seen a project with 50% proven reserves, let alone a maiden reserve. And the breakdown is 1.93% copper, a little bit of lead, 2.5% zinc, 2.5 grams gold, 46 grams silver with a 6-to-1 strip ratio. Majority of that 40 to 80 meters below surface. Then we have a 2.7 million ton mineable underground resource, which is the last 5 years of mine life. Notice the high copper grades there. And combined, we've got a 9.3 million ton mine life or mine resource / reserve when you combine the open pit and underground.
All those metals here shown, and they are all payable, right?
They're all payable.
Not like you can really get them out, meaning from the metallurgy.
Yeah, we produce primarily a copper concentrate. That's the main driver of value, but we produce a very strong zinc concentrate and a small lead concentrate as well. So 3 concentrates. We'll go over the recoveries later on, but the metallurgy has turned out excellent. A real win for the project. Mm-hmm. I should mention the joint venture with Salazar as well, just as a reminder. Salazar Resources is the top exploration group in Ecuador. They're publicly listed. We are now, as Adventus, required to fund 100% of the capital cost of commercial production. We receive 95% of the free cash flow until all of our investment is repaid. But by doing so, we have, as Adventus, 100% of the offtake rights. That offtake is very valuable. That is going to allow us to raise $50 to $85 million alone, just to provide the offtake rights to a group, and we got multiple interested. And we're allowed to encumber 100% of the asset, 100% of the cash flow of the asset, with securitizing 100% of the asset in exchange for streaming or debt financing to fund our portion there too. So we have lots of tools in our toolbox here to fund this project, the 248 million, as mentioned, with very little equity. Major advances, go through this quickly since the PEA. The reserves are drilled to 20 to 25 meter centers. Metallurgy is done into the highest standards. I don't think we can get any better than what we have today. We've increased the underground mine plan optionality. We've done a $5 million US dollar ESIA that's going to be filed shortly and start the 8 to 12 month clock on permitting. And all of the aspects of the project have been designed to the highest Canadian standards from an environmental perspective and using best in practice technologies. This is a neat graph showing the year-by-year basis, the payable revenue mix by metal. In open pit, we're about 50% copper revenues, 28% gold revenues, 15% zinc, 7% silver. We start in year 1 at 7% copper equivalent open pit. And for the life of mine, we were around 5% copper equivalent average grade. And in the underground component, we're 2/3 of the revenue copper. When you look at the PEA versus the feasibility study, almost everything is equal to or better than the PEA, except for 2 areas. Number 1, tax. That's out of our control, of course, and that's driven by a less favorable depreciation schedule and higher value-added tax. And then secondly, the capital costs. Capital costs are driven almost all by the geotechnical drilling we did in the feasibility study. No company does geotechnical drilling in the PEA or PFS, very few in PFS. Some of them don't even do geotechnical drilling in the feasibility study. Why is geotechnical drilling important? It's important to determine your pit slopes, your materials of construction, and your foundations for the project. And if you look at this capital comparison, we've got $33 million increased for mining. This is because the materials of construction, the PEA, were assumed as overburdened, just what they call tough material. The geotechnical drilling determined that the majority of the materials for construction for the tailings dam need to be andesite material or fresh rock. We were going to be mining fresh rock or andesite in the life of mine. That was going to be accounted for in stripping, life of mine stripping in the PEA. That stripping now has been moved into initial capital costs as pre-strip to access that andesite material to build the tailings dam. So it's, in essence, moving sustaining capital to initial capital.
Mm-hmm. Question. Contractor indirect went up from 1.2 million to 18.4.
Yeah,
Why happened that?
Yeah, I'll describe that in a sec. The other item here is earthworks. So that is specifically the process plant in the PA was on top of a mountain. The geotechnical drilling said that foundation is not stable enough. You need to actually remove the earth to get to the fresh rock, build a process plant. And then correctly pointed out, contractor indirects. PEAs don't go into that detail. What does that mean? Are there enough cranes or the type of cranes you need in Ecuador to build this mine? Do you need to import a crane? How much does that cost, etc.? Or where do your contractors sleep? Do they sleep in the local hotels or local homes, or do you have to build a camp? Those kind of assumptions, which you go into a lot of detail in the feasibility study. The one decrease here, which I should point out, is the contingency. This is plus or minus 10% contingency. This is as low as it can get in the feasibility study, and DRA had the confidence to do that because the majority of these costs are live quotes from contractors over the last 2 months and primarily Ecuadorian. So am I confident on this capital cost? Absolutely. There are ways to reduce this capital cost through further efficiencies and optimization, in particular on the tailing side of things. And in addition, this all includes 12% VAT tax to the government of Ecuador. We're currently negotiating an investment agreement with the government of Ecuador, and we see maybe $10 to $15 million coming off that VAT requirement in these negotiations. This slide, we've talked about the base case economics. I'm just showing the upside economics using spot pricing, the 44% after-tax IRR. It's an 1850 ton per day processing plant for very small, using conventional technology, conventional flow sheet. And you can see our recoveries are 88% for copper, 85% for zinc, 52% for gold, and 64% silver, producing very clean copper and zinc concentrates.
Sorry to interrupt you. Do you have any impurities in the concentrates, meaning penalties?
We have, it's talked in the feasibility study, life of mine, $4 million of penalties. Okay. So it's minor. The terms for the offtake were provided by a very large offtaker that everyone will know. 3 of the $4 million was tied to slightly higher zinc and lead content in the copper content. But in terms of stuff like nasties, like arsenic and mercury, and that's not a factor. Mm-hmm. Execution plan. I was in Ecuador last week. You can see me shaking the hand of President Lasso. That meeting had the key ministers that sign off on this project. It was a 90-minute meeting with our management in Ecuador. Went as good as it can get. President told the ministers, I don't want to hear about any delays or issues with regards to authorizations to this project. Let's go, basically. There were some to-dos that we had talked to the government with regards to permit delays, etc. We got all of them within a day of meeting with the president. The government has talked about permitting this project within 8 months. We are assuming in our timeline here 12 months, but obviously there could be an advantage to 8 months. There'll be a detailed press release around the ESIA filing in the next few weeks. Detailed engineering takes a year. project financing announcement in the first quarter of next year for up to 240 million. Investor agreement with the government of Ecuador in the first quarter. That's where we're going to get things like the reduction in the VAT I talked about. But Canada is about to enter into a Canada-Ecuador free trade agreement. Canada is the largest foreign direct investor in Ecuador, believe it or not. And so that free trade agreement gives extra protections in our investment agreement as a result. So Canadian companies like a Lundin Gold investing in Ecuador that have investment agreements, exploitation agreements, have a very strong legal standing in Ecuador. Project finance drawdown, we would be doing that likely October of next year in tandem with the start of construction. Early site works, a lot of that can be done with our existing permits, so that's clearing a site, installing a construction camp we bought from Lundin Gold, etc. 18-month construction period to commissioning in second quarter of 2024. We talked last time about exploration. So this study this week outlines 9.3 million tons in the reserves and in the mineable underground on one VMS lens shown as El Domo. We're just getting started on that regional exploration. A VMS lenses tend to occur in clusters. We've identified 14 targets in the district. We recently made one new discovery at Agua Santa. I think there's more to come. And there'll be additional drill results from Agua Santa here in November. On our porphyry projects, so we got our Pijili project where we made two new discoveries in the last year, just recently 19 meters of 3.6% copper equivalent from surface in April. We have a new porphyry target, fully groomed, ready to drill, fully permitted. We'll be discussing that target called Pato in a release in November, and we hope to be drilling there early next year. And then the famous Santiago. So we had a drill on Santiago in August. When we were about to get started, there was some indigenous activity that we said, okay, we're not ready to start drilling. So we removed the drill rig. We're working with the highest levels of indigenous leadership in Ecuador and the government to come back drilling here in January. We have $9 million US in our treasury today. We have ring-fenced $1.5 million US to drill the 3,000 meters. And I hope to have results in the second quarter of next year. So to conclude, in our view, we just put out a feasibility study on a copper project. You could say copper gold project that would have the top economics of any projects at similar stage in the world. And that's driven by the grade. We have a very, very willing and open government to build this mine. We think it is the only mine in Ecuador that will be built during the current Lasso government. So very high priority, not only with the president, but the key ministers on the mining file. We are in an interesting crossroads for the project. Are we going to sell and have someone else build it? Or are we going to finance ourselves, mostly non-equity, and advance it to production in 2024 and become a very significant free cash flowing company? We will know the answer to that by the end of the first quarter. So the next 4 months, I would say. And whatever route we go, I think will be very positive for our share price. We're well down the track on the permitting side of things now with the submittal of the ESIA coming up. We'll continue exploration, not only regionally in Curipamba, but on our other porphyry targets. We also have this joint venture with South 32 in Ireland that we never talk about, but they're going to be drilling our top target in Ireland here in November. That will be another release. And Jochen, hopefully next time we speak, we will either have executed on the financing package or we'll have sold.
Okay, that's a statement. But please, when you sell it, highest possible share price. I'm a shareholder too. Okay, super. Thank you very much for the presentation, Christian. I have still two questions. First of all, the $9 million in the bank, this is definitely enough to get you into the project finance, right? So you must not do any interim financing, whatever.
I'm glad you raised it. Very important point. We're not raising any equity in 2021. That cash position is sufficient to take us to April. More than enough time to make the determination called the strategic alternatives, build versus sell. When we go back to market, if we go back to the market, we will have announced one or two of the key financing packages, and it will be clear what the last equity component is to build a project. That is a small number, and that can be satisfied potentially by an investment by a mining company at a significant premium. So don't assume there's a bought deal financing by a Canadian broker.
Okay, super. Second question. If I look now at Curipamba as a mine, and then we saw your other projects, Pihili, Santiago, etc., Ireland, of course, yeah, where you have a great joint venture with Southern 32 here. Could it make sense to say, okay, you know what, we sell Curipamba, but the rest we spin out in a new company so that our shareholders still can benefit, for example? Might this be an idea?
You've asked me that question on last calls, and that's the ideal approach. The ideal scenario is top-notch mine builder, copper producer co. buys Curipamba. It's their next mine to be built. It's a TSX company, so it's a tax-free rollover into liquid company. So a shareholder of Adventus gets a share of the copper producer company. And then we put all the other stuff that you mentioned, including some cash, into call it Adventus 2 exploration company, where we can hit the Pato target hard, we can hit Santiago hard, and we can do it all again. That's the best outcome, I think, for shareholders, and that is possible. That's not off the table here over the next few months.
Okay, super. Christian, thank you very much for this detailed presentation and to give us such an insight. I think the most important fact what we can take from a presentation is your stock is horribly undervalued.
Absolutely. Yes. I will be on the road here over the next 3 to 4 months, pounding the table on the study, positioning it globally of kind of the next copper mine to be built, and of a select type of project which investors love, and it gives us the optionality as Adventus to build or to sell. Most copper projects are porphyries, where the only option is selling as a junior company, and that is not recognized. I think that build possibility in our share price.
Absolutely. Okay, let's hope that everything goes the way we want it and that we see a $1.50 to $2 share price soon here. That would be fantastic. And yeah, wish you all the best on the travel. And when you talk to the large investors here, we do also our best to spread the word. And thank you very much for taking the time.
Thank you, Jochen.
Thank you. Yeah, ladies and gentlemen, that was Christian Kargl-Simard, the CEO of Adventus Mining, and you heard it. Fantastic feasibility study. Everything looks really great. The only exemption is share price is, to my understanding, way too low. Honestly, I would see the share price much, much higher. Also, the analyst targets are much, much higher. And I could imagine if an M&A deal would be structured here, there's, for me, a minimum premium of 50%, maybe to 70% I could see. So still time to get into that share, because this is absolutely one of the best copper projects or polymetal projects with significant precious metals content in the world, definitely, and it is ready to build, I would say. So have a very close look onto that, do your due diligence. Thanks for watching us, and bye-bye from Switzerland.